Hello, FluentCast listeners. This is Diego, and welcome back to another episode of FluentCast. Today's episode is a bit different as we're diving into business English and discussing a major event that has just rocked the financial world, the recent August 5th stock market crash. But don't worry, if some of the terms I mentioned today are new or hard for you to understand, I will break them down and make them simple and easy to grasp. For instance, let's define stock market. The stock market is a collection of markets and exchanges where activities like buying, selling, and issuance of shares of publicly held companies occur. So there we go. We're going to break down what happened, why it happened, and most importantly, we'll be learning some key business English vocabulary along the way. Let's get started. On August 5th, 2024, the financial world was thrown into chaos as the Dow Jones Industrial Average, or DJIA, plummeted by an incredible 1,000 points before showing any signs of recovery. Plummeted means to fall or drop straight down at high speed, and in this context, it refers to a sharp decline in the stock market. This kind of drop is significant and has left investors, traders, and analysts around the globe in shock. But what exactly caused this crash? Let's break it down. There are several factors that contributed to this financial turmoil. The word turmoil describes a state of confusion, disorder, uncertainty, or great anxiety. First, let's talk about economic uncertainty. For the past few months, the market had been riding high on optimism due to robust economic growth and technological innovation. However, concerns about inflation, supply chain disruptions, and labor market data started to emerge. Inflation is when prices for goods and services rise, making your money worth less. Supply chain disruptions happen when the process of getting goods from manufacturers to consumers is interrupted. And labor market data refers to statistics about employment and wages. These concerns created a sense of uncertainty among investors. Another significant factor was the Federal Reserve's dilemma. The Federal Reserve, often referred to as the Fed, is the central bank of the United States. Its role is to manage the economy by controlling the money supply and interest rates. Critics argue that the Fed's reluctance to lower interest rates swiftly worsened the situation. Interest rates are the cost of borrowing money. If the Fed had lowered them, it might have encouraged more borrowing and spending, potentially averting the crash. But balancing economic growth and avoiding runaway inflation is a delicate task. Moreover, Japan's role cannot be overlooked. The Bank of Japan, which is Japan's central bank, made a significant move by raising interest rates. This disrupted what economists call the carry trade. The carry trade is when investors borrow money in a currency with low interest rates and invest in a currency with higher interest rates. Japan's policy shift sent shockwaves through the global financial system. As the market convulsed, panic spread like wildfire. Investor panic led to fear-driven selling, which triggered a cascade of losses. Portfolios, which are collections of investments, hemorrhaged value, leaving many stunned. The VIX index, also known as the fear gauge, spiked, indicating a surge in market volatility. Volatility refers to the degree of variation in trading prices over time. Daily swings became gut-wrenching roller coasters. Okay, for basic or intermediate learners of English, this last part may have sounded a little hard to understand. When I said, as the market convulsed, panic spread like wildfire, I mean that the market was very unstable and people became very scared very quickly. Investor panic led to fear-driven selling, which triggered a cascade of losses. This means that when investors got scared, they started to sell their stocks quickly, causing many people to lose money. Portfolios, which are collections of investments, hemorrhage value, leaving many stunned. A portfolio is like a group of different investments, like stocks and bonds. When I say hemorrhage value, it means that these investments lost a lot of their worth and people were very surprised. The VIX index, also known as the fear gauge, spiked, indicating a surge in market volatility. The VIX index is a way to measure how scared people are about the market. When it spiked, it went up very quickly, showing that there was a lot of fear and uncertainty. Volatility means how much and how quickly prices go up and down. Daily swings became gut-wrenching roller coasters. This means that the changes in prices each day were very extreme and made people feel very uneasy, like riding a scary roller coaster. And also we have the media coverage, which played a crucial role in this event. Reliable news sources worked overtime, providing real-time updates. Financial journalists dissected every move and whisper from Wall Street. The airwaves crackled with urgency, heightening the sense of panic among investors. Governments and central banks worldwide sprang into action. Coordinated efforts were made to inject liquidity into the financial system, calming nerves and stabilizing the market. Liquidity means having enough cash available to meet immediate needs. The ghost of the 2008 financial crisis loomed large, and policymakers vowed not to repeat past mistakes. Looking ahead, there are several prospects to consider. The crash has raised the risk of a recession. A recession is a period of temporary economic decline, typically defined by a fall in GDP, gross domestic product, for 2 successive quarters. Economic indicators like job numbers, manufacturing output, and consumer spending will be analyzed closely. Inflation pressure remains a concern. Supply chain disruptions, rising costs, and pent-up demand pose inflationary risks. The delicate dance between growth and price stability continues. In other words, prices might keep going up because it's harder to get products, things are costing more to make, and people really want to buy things. It's a tricky balance to keep the economy growing without making everything too expensive. The Federal Reserve's dilemma persists. Lowering interest rates could spur growth but might also stoke inflation. The stakes are high and the world watches with bated breath. Oh, and here are some interesting words to learn. Spur growth. This means to encourage or speed up economic growth, like giving the economy a little push to make it grow faster. Lowering interest rates could spur growth. That is, lowering interest rates might help the economy grow faster. And also you heard of stoke inflation. This means to increase inflation or make prices rise. It's like adding fuel to a fire, making the problem bigger. Lowering interest rates might help the economy grow faster, but it could also stoke inflation. But it could also make prices rise even more. In these uncertain times, it's essential to exercise caution amid the noise. In an age of information overload, discernment is paramount. Verify facts from credible sources and beware of misinformation. Remember, the market, like life, is unpredictable, but history shows it has always found a way to recover. So, to wrap things up, the August 5th stock market crash is a significant event, but it's also a learning opportunity. It's a reminder of the complexities and interconnections of the global economy. By understanding these events and learning the vocabulary associated with them, you're not only improving your business English, but also gaining valuable insights into the world of finance. Remember, while the market may be turbulent now, there's always hope for recovery and growth in the future. Keep learning, stay informed, and don't let fear take over. We're all in this together, navigating the ups and downs of the financial world. Thank you for joining me today on FluentCast. If you have any questions or want to share your thoughts on the stock market or anything else we discussed today, feel free to reach out to us on social media or through our website. If you're looking to improve your English skills even further, why not take it to the next level with personalized classes? We offer one-on-one sessions designed to your needs, whether it's business English, everyday conversation, or preparing for proficiency exams. Just contact us through our social media and we'll get you started on your language learning journey. Stay curious, keep learning, and until next time, take care, everyone.